You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Hey. You're over 60. What are you doing out? Go home.
Yeah, that kind of hurt when they said that, actually. Those of you with underlying health conditions or
over
the
60.
age of 60. Yeah, I'm going to go back to my house and get in a very small room by myself and lock myself.
That's what I do every day.
Yeah, I know. That's your life.
Day.
Yeah.
I live in a small room at my house.
I'm contradicting that, as you know, in many ways, because I go to work every day and I'm going to the Sounders game tonight. I don't care.
I'm telling you, the Sounders game is probably one of the safest places you can be. Think about how mixed up that air is. You're not going to get enough viral load to get sick. Just stay out of, tight little tiny tubes with...
Well, I mean, if you believe some, I think yesterday, relatively high official said, avoid Seattle. Avoid Seattle. That was said. That was actually... So there's like there's this Bhopal-like cloud hanging over us or something with the virus in it. It's also hanging over Wall Street, apparently, too, where everybody's taking this in and reacting to it minute by minute with 1,000-point swings up and down, and you at home trying to figure out what to do with your 401k moment by moment. We know the trading has been higher there. So,
if you're doing that, here's what you need to do before you do. If you haven't done anything yet, good for you. Call us before you do at 855-935-TALK, 855-935-8255. While we're talking real money on Talking Real Money, we're also talking real events that affect your real money, and we have a major one underway right now. Well, a perceived major one. Whether it is major or not is anyone's guess going forward. It really, truly is. But really, do this for us. Call first. This is for your own good. 855. I know you hate it when people say that. This is for your own good. Listen to me.
Sounds like your mom. Yeah.
Listen, son. Everything I tell you is for your own good. 855-935-TALK is the number to call. Call Tom and Don. They know what to do.
Okay, but let's just assume for sake of it that this is a pandemic, right? That this is going to be like the Spanish flu of 1918, just for sake of argument.
Okay, right? That one was bad.
Yeah,
okay.
That was like
all right, let's use that.
50 million deaths. Let's assume it's that. Okay?
Right.
And
I don't think that's a good assumption, but okay.
I would like to believe that science and technology have advanced in 100 years and that we think about these things, but okay. Science. But let's assume it's that bad, right?
Yes. I'm with you.
And your portfolio today is, like most people, kind of moderate, 60% in stocks, 40% in bonds, right? Because you hold some of those safer things that don't move around as much, right?
Well, in aggregate, that's about where our clients are.
Yeah,
that's the number we see for most of the investing community. It's about 60% stocks, 40% bonds.
And remembering, again, because sometimes people ask me, stocks have made more. They're riskier. Those are investments in companies. The right type of bonds are an IOU from the government that's saying they're going to pay you back, so they're completely different type of securities. But let's just assume it is going to be that, right? That we're all going to be there's more and more of this happening. You're all going to have to be locked up. That's what happened, by the way, in 1918, 1919. People actually did stop going out. You stayed in your home. It was that dangerous. Let's assume that, okay? And that the economy is going to go down, et cetera, et cetera. What are you going to do with your portfolio?
I don't know. I'm scared.
I know. And fear is a great, as someone pointed out this morning, motivator.
Tell me what I should do.
Still, the reality would be I wouldn't do anything knowing that because, number one, when are you going to get back in if you sell all your stocks? There's not going to be an all clear that tells you, okay, as of tomorrow, everything's okay and you can invest your money again.
Yeah,
right?
I read an op-ed piece in one of the major newspapers that said it's not like the sky is going to clear tomorrow and you go, oh, okay, everything's going to be good from here.
Yeah, nobody knows that. And when that feeling does come back, and it will at some point because we've got the numbers to show you, whether it's the avian flu or the HIV, whatever outbreak there's been, that actually stocks have produced very well in the periods following. But let's just assume it's going to be horrible and you sell everything out. You're not going to know when to get back in, right? The reason you're in stocks is to give you some growth of your money over a long period of time, not a short period.
Here's the problem. People think they don't mind the risk in stocks when the market's going up.
Oh, yeah.
I don't mind the risk because they don't realize that risk is not an abstract concept.
Yeah.
Risk is what is the loss that you have to accept that will occur. One thing we have said throughout our tenure on this show, we have given you but one guarantee. Only one guarantee. The stock market will go down. We guarantee that. Well, we were right about that. Look, our guarantee came true. Now, we can't guarantee it'll go up, but we're pretty darn sure it will, since it always has, at least so far. So call us. Let's make the whole world more calm. Let's hold hands. 855-935-TALK.
Tom and Don are talking real money.
Do you need a little help with your investments? Set up a free, no-obligation appointment with one of our advisors at TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
And you have a standing invitation to talk real money with us on Talking Real Money, the Real Money Talk Show on the radio and as a podcast all over the world. All over the world, everywhere.
And you can do all that and still avoid Seattle because you just use the phone.
Exactly.
You don't have to come here. It's perfect. Yep. Avoid the cloud of coronavirus.
I'm here
hovering
in
over
my
us.
hermetically sealed room.
I know. I'm being half facetious, but really?
No, I'm seriously in a hermetically sealed room.
You should be in a room, and it should be padded, and it should be locked from the outside.
Look over here. It's padded.
That's true.
855-935-TALK.
I never noticed that till right now.
It is. It's padded. Look, see the padded?
I feel so much better.
855-935-8255 is the number. Give us a call. We'd love to try and help you deal with money. And come on, we're going to introduce our next caller the right way. Are you going to harmonize with me?
No, I'm not going to harmonize. I'm not going to. I'll allow you stand alone on that silliness. Sherry, hi. Welcome to Talking Real Money. How are you?
I am doing all right.
Good.
First off, I have bronchitis. I do not have coronavirus. If I start coughing, that's what that is.
Okay.
Oh, the germs are coming through the phone.
We weren't going to report you anyway, but well, maybe we will report you. Go ahead, Sherry. Seriously.
Be nice.
How can we help?
Well, here's my question. I have not done anything at all with my stocks ever since all this craziness hit. What I want to do is I would like to jump in and buy more while the cost is really low. Is that a really stupid idea?
No, that is a really good. How old are you?
I am 56 years old.
How long until you need the money?
At least 9 years.
Then, yeah, this is one of the things that people forget, by the way. If you're in a 401k, every 2 weeks you're putting money in and you're buying more shares at a lower price. So, no, this is a good time to buy.
And you mentioned you have a stock portfolio. Is it individual stocks or is it a mutual fund?
It's both. It's what I have through my 401k is the Vanguard, but I'm more of a 70-30 girl. I'm not a 60-40 play it safe. Just never been my thing.
That's good, but here's an idea.
You've made more money. Go ahead, Don.
I have a wonderful idea for you, Sherry. If you have individual stocks, odds are those individual stocks have gone down in price some. We're not a big fan of owning individual stocks. If you have any tax losses in any of your stocks, take them. Take that cash, put it into a mutual fund. That does not invoke the wash sale rule. And then you're selling, you're getting a tax advantage from the government, and you're buying low. But Tom's absolutely right. If I had a choice between buying a few weeks ago when stocks were 12% more expensive or today, I'd pick today. Absolutely.
Does that make sense?
it makes sense to me, but everybody's like, "What are you, crazy?"
Yeah, I mean it's a fascinating. It's counterintuitive in a way, but in another way, it's not. Let's just say, for example, you're buying clothing at Nordstrom. It's when it's cheaper, you're going to want to buy it. When it's on sale, right? You want to buy it. But when stocks are on sale, everybody thinks I got to run to the exits. Yeah, they got it all backwards. So no, you're absolutely right.
It's very counterintuitive, but it's very counterintuitive because it's people get. They project they do a straight line projection. They think that it's going to be like this or worse forever. So they're now thinking, well, my retirement is threatened. But wait, retirement's not for 5 or 10 or 15 years down the road for most of these people. Even if it's immediate, you shouldn't have 100% in stocks anyway. You should have a balanced portfolio.
Thank you for the question.
Just get it right. Thanks for the call, Sherry. We really appreciate it.
And let's give you a couple of numbers since you mentioned that, Don. The 1987 market crash. I can remember that day well. You do as well.
I was a broker then.
5 years after the crisis, the total return of the S&P 500, 95%. 9/11, 5 years after the crash, the S&P 500 up 40%. The Lehman bankruptcy in the fall of 2008, 5 years after that, the beginning of the financial crisis, S&P up 61%. I can go on and on. I mean, the fact is, we have no idea what the next 5 years will bring. But if you look at history, the best way to invest is to ignore all of this. And there's a lot of this. I get it. Every time I go to the Seattle Times or Como or anywhere, this is the front page. Every piece of news is about how many people are infected, how many people are dying, what all that means. And I think it gets in people's heads to the fact that not only should I run to Costco and buy out the remaining toilet paper, but I got to do something about my money. And I'm frankly not in favor of either.
Yeah, and the fact of the matter is your point about 401k contributions and the like, great point. If you're in a 401k at work, you should be cheering every week the market is lower because you're putting new money in at your next paycheck and you're doing it at a much lower price. I mean, and if you're young, oh my gosh, go buy stocks.
In fact, the global portfolio's lost about 13% year to date, which is that's significant. That's a real number. But a balanced portfolio, as we talked about earlier, 60% in stocks, 40% in bonds, down about 7.5%. So it hasn't been a major crisis. And you're exactly right, Don. You're getting more shares at a lower price. You're doing that every 2 weeks. You're getting, all these, whatever's happening that day, whenever it's being purchased. That is the part you need to ignore. Your plan, as we chatted about last week in our minimal time on the air, is about you. It's not about the crisis, whatever crisis that is. By the way, there's going to be another one here before too long. It's called the presidential election, because once the nominees are known this summer, that will be in the news every day, and depending on who's running ahead and what's that going to mean to the economy and what's that going to mean to my stocks and my taxes are going up or down or whatever, that stuff is always there. It's always there. You got to learn to tune it out and make your plan about you.
And it's so important that we all work very hard to put what is going on right now with the coronavirus in perspective. And I haven't heard this. I don't hear it on the media. I hear them talking about all the things you should do to protect yourself and how you should avoid this and do that and not do that. And But the reality is, one, death is part of being a human being. We do die. I don't mean to sound callous, but we do. All of us eventually do it. We're going to do it. And what has it been now? About a month since coronavirus got into the U.S.?
Sounds right. I don't know. Yeah.
Yeah. So far, we've had 19 coronavirus deaths in the United States.
Yeah.
So far, 19. So far, in the past month, we've had well over 3,000 automobile fatalities in the United States.
Yeah, which is...
How many of you know someone who has died in a car accident?
Yeah, and sadly, you and I both have somebody in our immediate family who's died in a car accident.
I bet most people have someone in their very close family who has died in a car accident. How many of you know someone who's died of a viral infection?
Fewer.
I don't know anyone.
Yeah. All right, we're going to move on. We're going to talk about
it's not bad.
Where you should look for to get advice to get through this crisis, how you deal with it, how do you find the right people. We'll talk about that.
Yeah, good luck with that. 855-935-TALK.
Tom and Don are talking real real money.
It may not be the sexiest website in the world, but it's your one-stop shop for real money information. TalkingRealMoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Well, we live in interesting times, politically, health-wise, and financially. And to help you with the financial part of those interesting times, you have us. That's Tom over there. I'm Don over here in my hermetically sealed room.
You're the radio disc jockey guy. I heard all about
Right.
you. Yeah. You know what?
can't
You're
help
spinning the discs. They got the stacks of wax over there, and you're doing your thing. Good job.
I was born with oversized vocal cords, so
I told
I got
somebody
the giant
that
economy size.
you were practicing being a radio guy one night. You went to bed practicing. You woke up the next day, your voice was the same. You're like, what? Anyway, so it worked out. So good, congratulations.
You know what's funny, though? When I was a little kid, like 8 or 9 years old, I used to, on a little cassette recorder, it was about that giant. It wasn't little.
I can remember those
It had a
cassette
crappy
recorders.
mic.
Yeah.
I used to do a fake radio show when I was a
did.
little
By the way,
kid.
I did the same thing. Hipsy dipsy
And-
weather.
I got to tell you, I sounded so bad.
I think I still have the tape somewhere. Should be destroyed.
All right, so here's the number again, 855-935-TALK, 855-935-8255.
You
If
can
you've been
call
thinking
us.
to yourself, yeah, you can call us. And it's a virus-free call, toll-free and virus-free.
I don't know if you can make that
And
guarantee, but okay.
I can promise no virus will go down the phone line.
Okay.
Promise that.
Mm-hmm.
I know that for a fact. It is a law of physics with a PH. Now, I'm also good at financial physics with an F. There was one other thing I was going to mention. Oh, so if you've been wondering, where can I go and get good advice? Us, 855-935-TALK. Anybody else, Tom?
Well, the problem is, this is always the question. You can't get the yellow pages and open it up to financial advisors.
You can't get the yellow
I know,
pages.
that's the point.
Where are you going to get the yellow pages?
You can't get it. You shouldn't go online and type in
Good job,
financial
Joe
advisor.
Biden.
Thank you. Yeah, you shouldn't go online.
Yeah, my kids listen to the turntable and open the yellow pages.
Exactly. You can't go online, and you can go online and find people, but they're not the right type of. Basically, anyone can call themselves a financial advisor. It's sad, but it's true. And here's the part that's a little more troubling. I think people hear certified financial planner, and they
it
think,
sounds important.
yeah, well, I think it's a terrific designation. It really is, because it's very thorough. Looks at investing and taxes and estate, all those things that a planner should know about. But it says nothing about how you're paying them. And it was shocking, frankly shocking to me, that the Certified Financial Planner Board has decided now not to list or tell you, if you go to ask them about a planner, how that planner is getting paid. And beyond that, Don, frankly, it was even more shocking to read from Jason Zweig today that 80% of CFPs, he believes, by some estimates, charge at least some commissions.
Jeez.
That is a high number.
And here's the thing about CFPs is they claim that CFPs are supposed to act as fiduciaries.
Yeah, you can't count
At all
on that.
times, but they don't. As a matter of fact, the CFP board has plans to put into effect in June, I believe, new rules that would require that all CFPs act as a fiduciary. And I'll be shocked if that goes into effect, given the fact that 80% collect a commission, which violates their fiduciary responsibility.
Well, basically, they can't be I mean, if you're selling a product, you can't be.
You have a conflict
Right.
of interest.
You can't do
Whether
that.
you have an apparent conflict of interest,
True.
I should say.
Yeah.
It may be that a commission product is the best product, although I don't believe that. I mean, it's possible.
I'd have
Anything is
to. It would
possible.
take some real convincing to tell me what product that was.
I know, but what I'm saying is maybe. But in a general sense, though, they can't be always acting as a fiduciary and be collecting commissions.
And we come back, we'll spend a couple minutes talking about where you can go find fee-only fiduciary advice.
Yeah, you know, I just looked under Investment Advisor Bellevue.
Yeah.
And you know who came up? Vestry on the
Nice.
first Yeah, I
Well
know.
done, sir.
So I guess
Well done.
you can go to the new version of the Yellow Pages. It's called Google. 855-935-TALK is our number. Give us a call.
Tom and Don are talking real money.
Download the advisor interview form and find out if your advisor's a fiduciary at talkingrealmoney.com.
Reality radio for a really great future. We're talking real money.
Hi, welcome back to the show. I'm Don McDonald. It's been a crazy few weeks. We're here to try to help make them a little less crazy for you. Call us, please, at 855-935-TALK if you have a financial question of any kind. 855-935-8255. Before you do something, call us. If you've already done something and you need help fixing it, call us. Or if you're just confused, call us. Or if you have an idea you want to share, call us there, and too, 855-935-TALK. Now, quickly, after the break, you talked about the CFP board.
Yeah.
And so I went to their Find a CFP Professional website.
CFP is a certified financial planner. It is probably I would say the best designation for those people that are helping individuals. They're not analysts. Like a CFA would be more somebody who's analyzing companies or, gets into the money management side. But for people that want direct help from a professional, I think it's the best designation you could get.
Well, it would be nice, though, if you could count on getting a 100% fiduciary advisor, one who's always required to act in your best interest. But I went there, and this is something you can do at home, too. If you go to their site and are looking for a professional, it's really interesting. The very first person who comes up on the list when I search for 98004, which is Vestry's zip code, is a guy who works for AXA Advisors.
Now, AXA
is a big European insurance company.
Right, yeah. I mean, so you're likely to get a commission product of some kind. Doesn't necessarily mean you have to, but it's probability.
I skimmed their ADV during the break, their disclosure form.
Oh, yeah, how much?
And it turns out that there are paragraphs saying, well, we may have a conflict of interest in that we do sell commissioned insurance products, et cetera, et cetera, et cetera, et cetera. And then their fee structure varies so much from person to person. It's not until page 31 that you actually get to fees. What is ours, on page 3?
Yeah.
31, and it goes for, get this.
How long?
Wait a minute. I'm going back to it because I was looking up their insurance things. Let's get here. There. Oh, it's finally. I'm to page 31. So we go 1, 2, 3 pages where they talk about fees and expenses. One of their programs has annual fees of 2.49%.
And if you've listened to this program for a while, you know that we don't think you should pay anyone more than 1%.
And I think I've broken the code, because if you go there and it says they are registered with both FINRA and the SEC, then you can be pretty confident that they're not always required to act in your best interest. And here's the next one's Wells Fargo. The one after that, there's an Ameriprise, Morgan Stanley, Penn Mutual, another one from AXA.
Can I make a suggestion here?
None of these are fiduciaries.
Yeah, I mean, you can go to talkingrealmoney.com and click on Find an Advisor. We actually have a list of firms that we think you could trust because they're all 100% fiduciary. They all use index or index-like mutual funds, and they will all charge you what we believe to be a fair rate. And well, on that same page, we offer a form that if you took to AXA Advisors, I doubt they would sign, because it asks them, will they always put your interests ahead of their own? They can't sign that because they're not always going to do that if they're selling you a commissionable product.
Well, here's all it says. It's a little simple one-page form, and at the bottom it says, I affirm that I am required by law to act in your best interests. I take my fiduciary responsibility seriously, so I promise to adhere to a strict fiduciary standard in all of our dealings as follows. I will always put your interest ahead of my own. I will conduct prudent and responsible due diligence using the best resources. I will always behave honestly. I will avoid conflicts of interest. And should potential conflicts of interest arise, we'll disclose and manage them in your favor. That's it.
Yeah. But you will find that most people in the industry will not sign that. Most people in the industry don't live up to that standard. As you pointed out on the last study that we saw, was that 99% of the industry could not sign it. Only 1% is always required to put yours, the client's interest first. It's a small number.
9%.
Yeah.
How many of you know 100 investment advice providers, financial advisors? How many of you know 100?
I'm one of the rare ones with a hand in the air. So
Yeah, that means that odds are you don't even know a fiduciary advisor.
right. And so, but I mean, back to where we started, you cannot, by the fact of hiring a certified financial planner, a CFP, know that you're going to get a 100% fiduciary advisor. Just doesn't work.
As
The
a
two
matter
are
of
not
fact,
linked up.
one of the people whose advice I dislike the most
Yeah.
in the Seattle metropolitan area,
Uh-oh.
one of the more famous advisors,
Paul
in air
Merriman?
quotes. No, I'm not naming names, but he's a
kidding ya.
CFP.
Yeah, Paul's
And
not. Yep.
Go to Advisor Selection Tools. It's a guy holding up a Help Wanted sign at TalkingRealMoney.com. That's the picture. It's the guy holding the Help Wanted sign
All
because
right.
you need help. And that'll give you all those tools, and that will help you find a better advisor.
Tom and Don are talking real money.
Just about everything you need to know about money can be found at our website, TalkingRealMoney.com.
For your real life and real future, Tom and Don are talking real money.
855-935-8255 is our number, and we'd love to help you muddle through the confusion and frustration and bewilderment that is dealing with money on a daily, weekly, monthly, lifelong basis. And we don't think it should be as confusing and frustrating and bewildering. As a matter of fact, we believe that you can build wealth without worrying about what the market does on a day-to-day basis.
But if you want to worry, if you want to
don't.
concern, I've got some things you should have bought and held last week. Yeah.
Wait, you do?
Did you know? Yeah.
What should we have bought last week?
S&P 500 utilities up almost 8%. Gold up 6.8%. But more importantly, maybe this is one that you got into. I know I did. Really early.
You did not.
Really early.
Liar.
Up 5.8%.
I already know you're lying even before you say it.
Lean hogs up 5.8% last week. Big week. Apparently, all the
give me my hogs fatty.
So what?
I want
yeah,
a
so
heart attack in
lean hogs
heart
don't.
attack in pork.
I'm assuming they don't make bacon. I don't know. What does a lean hog produce? I don't know. What
pork
lost me.
tenderloin.
Oh, yeah, there you
nice
go.
Little
Okay,
pork
yeah.
tenderloin.
Well, they had a
the
big
other
week.
white meat.
Big week. Gold had a big
That's
week,
so
by the
funny.
way. The yen had a good week. Anyway, natural gas had a good. You know what didn't have a good week? Among other things, crude oil down almost 8%. So I'm going to be expecting to see that very soon on the gas pump, like tomorrow, right?
Actually, I went and filled
I
up
doubt
the
it.
car.
I'm kidding.
No, I went and filled up the car the other day.
Which you
and-
do about every 3 months or whatever it is.
Well, yeah, it's not all. It was so funny because Debbie's driving it around, and then I get in to go somewhere just 3-4 blocks away, just downtown, and I look down and I go, we're out of gas.
Doesn't
She
matter.
goes, oh, well, she's the only one who overdrives it. I stay in my hermetically sealed room.
That's true.
So I took it to fill it up, though, and the gas has been $2.39 to $2.49.
That's a lot less than I pay.
And I got it for $2.19.
Wow. How about a nice 30-year mortgage? What can you get that for now?
$2.19.
Everything is $2.19.
About $2.19.
Whatever it is, yeah. Or that's what you can get if you want to give every American to vote for you for president, right? I mean, isn't that no? If you
Are you talking about the NBC
If you
story?
gave every American $1 million, you'd still have money left over, right, Michael Bloomberg?
Right. Yeah. What did Bloomberg spend? 300.
No, 500 million. 500. And
$500 million.
somebody tweeted out.
Brian Williams.
No, well, he used the
Wasn't
tweet.
it? Oh, he
read.
used it. That's
somebody else tweeted out. Yeah, what if Michael Bloomberg had given because there's 320 million Americans, given every American. By the way, they forgot that not all Americans are eligible to vote. But that aside, assuming Mr. Bloomberg gave every American $1 million,
yeah,
he would have had money left over from his $500 million campaign. Now the math there is a little questionable.
And Brian Williams repeated it.
I know. Come on, really?
So we have.
He could have. By the way, just so we clear this all up, he could have given every American $1.43, not
Right,
$1 million, which to buy my vote. Just saying, for anybody who's curious, it's going to be more than $1.43. I
in
would
fact, I'm
require
trying
a
to
greater
figure out-
amount than not a lot greater, but more. So
How much would it be to give every American $1 million?
it's trillions of dollars.
No, it's into quadrillions.
Yeah, no,
I
it has.
believe.
Well, it's 300 million. It's a lot of money. I can't do that many
Well, let's
zeros
see.
on my
It's
iPhone,
36,
which is where the only math
zero,
occurs
zero,
for me.
0, 0, 0.
It's a lot of zeros.
Zero.
The point of the matter is, this is no. It's a good. This is a good lesson for anybody, and this is something that I've really worked hard with my kids on, and that is you should always, before you do anything, have an estimate. If you go shopping and you buy 20 things, you should get to the register and say it's going to be about $8. So when they charge you $80, you can say, well, wait a minute, something's wrong here. Or if you're running for president and you say, I want to spend $500 million, how much can I give each person? And somebody says $1 million each, sir. Then you say, no, the math doesn't work. That's only $1.43 each. And
So
Don's still
that's a
running.
million.
I think it is quadrillion, actually.
That's $1 billion.
You
That's
got another
a
zero.
Trillion.
Yep.
That's a quadrillion. No, it's 36. Yes, it's 3006. What's above a quadrillion?
I don't
What's
know.
the next one up?
I would
A
ask if I was
quintillion.
home, 'cause I'd
yes,
ask
it's
Google.
a quintillion.
Yeah.
And so
And
that's
even Mr. Bloomberg doesn't have that much money.
That's $3.6 quintillion.
Just for the record, I think he's only worth like $60 billion. So if you were waiting for your $1 million check to show up, well, you might get it, but I'd run to the bank and cash it very quickly, because once Americans start doing that, like toilet paper, it will disappear very quickly. It'll be out of there. You'll never get any. That'll be that. And then hand sanitizer and the like. So you'll be out of luck.
And think about this for a minute. That is, the global GDP is $85 trillion.
Annually.
So that's 100,000 trillion.
Yeah. It's a lot of zeros.
I can't even think
But,
that high.
but Brian Williams, really? Seriously?
Yeah,
He should have been a little bit.
This tells you the value of a good mathematics
Yeah,
education in America. We need to at least teach them how to use a calculator.
Well, yeah. I mean, did you run all that on your iPhone? Did it go that many zeros? I thought mine limited.
I ran it on my computer.
Oh, I was going to say, because I don't know
My
if your
computer-
iPhone can do that many.
I have the killer computer. I have the Apple iMac
Don
Pro.
has the computer that Stephen Jobs would have if he was still alive.
Oh yeah, absolutely.
Something like that.
This is one fast hauling
that thing. Yeah,
cooking machine.
You could fly to the other side of Pluto and back using the calculations there, and not worry about
no
skipping
kidding.
off into the universe.
I totally could.
Yeah, that thing can.
This thing
got
can
computing
model,
power and then some.
It can model
More
molecules.
computing power than when Thomas Jefferson dined alone. I mean, this thing really can do it.
How is and here's one of the issues. And I care a lot about you, Tom.
I don't know that, but I'm going to let you go ahead and say it.
Okay, I do. I think the world of you.
Wow, that's very kind.
But your dad jokes, they've got to go. They've got to go.
Yeah, I know.
GTK.
But that's all I got. I gotta stick with what I got. That's it, man. Sorry.
Yeah, this is a 3.2 gigahertz, 8-core Intel Xeon processor with 32 gigabytes of RAM and 4 terabytes.
Okay, just so I know, if
storage.
anything were to happen to you, where does that computer go? Do I get it?
Yeah, sure. What would you do with it?
I
You would have no clue.
run videos or something. I wouldn't have the slightest idea, but I'd just like to know that I had it. That's all.
It is a great machine. I got to tell you, I used to edit all the audio and video on just a regular iMac, and I would be in my studio recording, and the fans would do this.
Yeah, we used to hear them on the show.
Oh, it was terrible. Now it's like, shh, whisper quiet. This is not a commercial for Apple.
Sounds
did I
like
tell you
it.
about, this is something new that I did want to mention. I mentioned it in the podcast because I got a question yesterday about health savings accounts. This is just something we should look at, and we'll just explore it on the show.
A health savings account, which is you could save, I think, pre-tax, right?
Yeah, pre-tax.
Yeah, and the money goes away, and you can actually, they oftentimes give you mutual funds you can put the money in.
Yes.
Yep.
But the problem with TSA or with HSAs is that most of the money gets used early. So it doesn't make sense to put it into a long-term account initially until you build up some wealth in them. And then it can kind of become an alternative to retirement savings.
Yeah, I mean, you can take it out much later and use it for retirement.
But most companies don't want to set these up because they're expensive and they don't. You put them in a savings account, they don't make anything on them. But there's a company called Lively. This is something we should look up. It's a free HSA that earns market rates, and then you can invest for free through TD Ameritrade. It's actually a pretty slick deal. Check it out. 855-935-TALK.
Are talking real money.
Would you like to talk to a real investment advisor for free? Set up an appointment at talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And in addition to calling us on the show at 855-935-TALK to get your questions answered, you can also call that number 24 hours a day, 7 days a week, and we'll answer your questions on our podcast, which you can get at talkingrealmoney.com, along with lots of other great stuff, including videos and links to all kinds of great written material, our forms and the like, and you can set up an appointment to meet with one of our advisors for free, for nothing, without a high-pressure sales pitch. That's a promise. Just go to talkingrealmoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit talkingrealmoney.com for more information and disclosures. Are we done now?